Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with the daily update on the Nasdaq-100 index, or the NDX. Joining us this Thursday afternoon, we have Joyce, managing director on Nasdaq's market intelligence desk. And Brian, before we get to the Nasdaq-100 chart, let's take a look at the 10-year, because really the conversation, in addition to geopolitics, is really focused on inflation and rates, and certainly the 10-year is going to be reflective of that.
Hi, Jill. So absolutely. So, with the inflation, as you noted, the bond market has really seen some extreme moves right now. We peaked 2 weeks ago about 2.06%, and this week hit a low of 1.68%. So we've had a nice pullback. We're now about 1.85%. The short end of the curve has been holding up because the inflation data, is still very high. Oil's trading higher. Things like wheat are up 50% in a week. Corn is much higher as well. So the short end is still holding up. With expectations that the Fed will have to continue its rate hike. So as a result, we're seeing the short end going higher, or at least holding flat, but the long end coming in. So that's causing the yield curve, this is the 210 spread, to dramatically flatten. It's down to almost 30 bips right now. Last is 31.5 basis points.
Right. And you know what, Brian, I also want to take a look at our next chart here. Of course, that's going to be the oil chart. And, in inflation environment that's already been exacerbated due to supply chain issues and a number of other things, including the pandemic, certainly what's happening with Russia and Ukraine and the tightening that we're going to see around oil delivery and natural gas delivery and so forth is only adding to that, which is going to make the Fed's job and all the central banks' job more difficult. But what I find interesting is April 20th, 2020, right, just about 2 years ago, remember that futures contracts were trading below zero, right? Now talk about a round trip in 23 months to nearly, what is it, 110, 115, where we're trading right now. I mean, it's just the velocity of the moves, whether we're looking at rates, the regular averages, the stock averages, and oil, is really a big part of this story.
Absolutely. So what you just noticed was how oil traded negative in 2020, and that's what we can see right here captured on the chart. This red line is just about to break even, the zero line, and we did go down to about negative 40 in 2020. And so extreme to the downside, just this last week, we've seen oil, including today's high, up as much as 27% from Friday's close. So in 3.5 sessions, up over 27%. And that's what we're seeing right here in this line chart of oil. So just extreme, phenomenal moves. If you kind of zoom out and look a little further, this is a monthly period chart of oil. So it goes back further in time, and you can see, today's high in this monthly candlestick hit the highs that we saw back in 2013 and in 2011. So that 110 to 115 range, which were the highs from approximately 2011 to 2013, we're now running into at the moment. So not expected right there from a technical point of view to see some resistance and some pullback, which we've seen so far in today's session. The question is, how long will this pullback last? Will it go, further up? A lot of that, I think, obviously will depend on, talks, between Ukraine and Russia and the West and NATO, and how that conflict resolves itself. Is it going to be something in the near term with a settlement, or is it going to be something that's going to be ongoing?
And let's take a look at the chart of the Nasdaq-100 and establish some fresh levels there, because of the major averages, it is relatively underperforming. We know interest rates are going to impact some of those technology companies. And you also have to remember, we don't have energy exposure in the index, so we're not getting the juice that you're seeing within the energy sector there.
Yeah, absolutely. Energy is now the only sector that's in the green year to date. So the Nasdaq-100 with a lot of tech, a lot of consumer discretionary, healthcare, certainly, I'm not benefiting from that energy exposure. Right now, we're seeing the daily period chart of the Nasdaq-100. We can see this week we've had a death cross, which is where the 50 crosses down below the 200. That's a very traditional, quote unquote, bearish signal for, within technical analysis. Most technicians are aware of the fact that usually when this takes place, it could actually signal a low is in place. I'm not sure if that will be the case this time around. On the weekly period chart, I do like the look of last week's candlestick as a potential bottoming pattern right here. It's certainly a classic bottoming signal. Whether or not that turns out to be the case remains to be seen. As given the macro headwinds we're facing, the inflation headwinds, the Fed now being forced to raise rates in a slowing economy. They're way behind the curve. In doing so, we're just coming off of QE less than a week or two ago. So, we're just beginning, where we're just about to enter this tightening cycle. Markets are pricing that in right now. But so as far as the NDX is concerned, you like to see this candlestick. It does look like a bottoming candlestick. Last week's low is 13,065. That would be a level, one could invest against, or risk level to use if you wanted to go and take a shot at the long side here. Again, your time frame on your investment is certainly key. And on the upside here, I could see us bouncing higher. The initial level I would look to is 14,385, which was the low back from October. And then I would look to the 40-week average of the 200-day, which is approximately 15,150. So those are the two levels near term I'd be looking at on the upside for potential resistance: 14,385, and then let's call it 15,145. And just above there, we had these lows back in December, which do coincide with the high in September, and that's about 15.7. So before we get up to 15.7, we certainly have some levels to look to, 14,385 and 15,145.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.